अस्सलाम वालेकुम क्लास। आज हम देखते हैं ये दो प्रैक्टिस क्वेश्चंस जो है वो इनको हम करते हैं। प्रैक्टिकल प्रॉब्लम्स है वो अब हम बुक मूव कर रहे हैं। तो since we have studied generic concepts, now we'll be applying the specific scenarios with special reference to our concepts which we have already studied. So we'll be looking at this uh, question for starters, which is problem 11. We are still recording the journal entries. Today we'll be proceeding to the next step after recording the journal entries, which is the recording these entries into a ledger. So starting with the first transaction, the business was started by selling $100,000 worth of common stock. 6 months rent was paid in advance, 4,500. Provided services in the amount of 1,000. Customer will pay at a later date. An office worker was hired. The worker will be paid 275 per week. Received 500 in payment from the customer in C. Purchased $250 worth of supplies on credit. The next transaction is receive the electricity bill. He will pay the 110 in 30 days. Pay the worker hired in leave for 1 week. Right? Work. And then receive $100 from a customer for services we will provide next week. And dividends in the amount of 1,500 were distributed. Prepare the necessary journal entry. This is what we are going to do. So I've read the question. The purpose was to give you an idea what we'll be recording. So you can save this screen and we'll be moving on to record these transactions one by one now. Okay, now starting with the first transaction, which was the business was started by 100,000 worth of common stocks. So how would you record it then? Here transactions are to be recorded as here the first element is here account title. We have debit and credit. So these. So your first transaction is transaction number 8, which states that business was started by selling 100,000 worth of common stock. So common stock is basically owner's investment, right? Owners have invested. Previously, we were writing it as owner investment. So in the case of company, this owner investment is written as common stock. So what would you have received? Cash, 100,000. Now, instead of owner's investment, we are writing common stock. That's the only difference between company's accounts and sole proprietor and partnership. We're talking about the only difference which we have studied till now. We're not saying that that is the only difference. There are too many differences. We'll see about it with the passage of time. Now, your second transaction number is transaction B, which is stating that 6 months rent was paid in advance, right? 6 months rent. So when rent is paid in advance, we write it as prepaid rent. And obviously, since it is paid, so it is cash, and 6 month rent is 4,500. So this 4,500 has been paid in advance. So that is why it is written as prepaid rent. Now, if we move to the next transaction, which is transaction C, which states provided services in the amount of 1,000, customer will pay at a later date. So customer has not paid. So that means this is account receivable, right? Of 1,000. Since it is a service, so it will be service revenue. 1,000. Since you mentioned clearly that customer will pay at a later date, so that is why we have to write it as account receivable. We can't write it as cash. Okay, moving forward. Next transaction is an office worker was hired. The worker will be paid 275 per week. So since it is a hiring transaction, it is just for information. So you will not record it. This is about transactions. Moving on to transaction E. So transaction E is basically receive 500 in payment from customer in transaction C. So we have 1,000 receivable, of which we have received 500. So cash is converted into 500, and this account receivable of 1,000 we have received 500, right? This concludes our transaction number E. So moving on to transaction F, it states purchase $250 worth of supplies on credit. So these are office supplies, which are assets basically, and they are on credit. On credit means they are account payable. So how much is it? That is 250. So we should be writing it as 250. So this concludes our transaction number F. Okay, moving on, we have transaction number G, which states receive the electricity bill, we will pay the $110 in 30 days. So this means he has not paid it. So electricity Utility daily expense has been incurred, but he has not paid it. So I can write it as daily paid. How much it was? $110. $110 still payable. Okay, moving to the next transaction. Paid the worker hired in D for 1 week's work, which was 275 per week. So now transaction H is about salary. So it is salary expense or whatever. You can write wage expense as well. And you have paid it cash. The amount was 275. Yes, 275. So this will conclude your transaction number 8. So transaction number I is about that he received $100 from a customer for services we will provide next week. So keep in mind he has not provided the services. So this is cash basically received as 100. This is transaction I. And services have not been paid. So this will be unearned, just like we earned this in the last lecture. Unearned service revenue. So this is a 100. So this will conclude the transaction number I. Next transaction will be J, which is dividends in the amount of 1500 were distributed. So he has distributed them, so it will bring dividend expense. So we were discussing the last transaction, which stated that the dividend expense is 1500 and cash credit 1500 since it was paid in cash. So this concludes your question problem which we were discussing. All we needed to do was record the journal entries, and if certain entry was not recorded, give its justification, like we gave for the transaction D, I believe. Yeah, this is one, because this is just for the information purposes, and this information was used in ultimately when we paid the salary to that individual in transaction H, right? So these are journal entries. Now we obviously we will be discussing these with the passage of time, but we need to discuss the next step, which is posting these journal entries to a ledger accounts. So generally, uh, here in business, we business studies normally we don't go for ledger accounts. We go for their shorter version, which is called T accounts. So T accounts are basically shorter version of ledger accounts. We don't provide many details, but if we do, then it becomes the ledger account. So it is called T account since it is like T. So this is T. Left side is basically debit and right side is credit. And the first account, for first and foremost account is your cash here. So these T accounts are unique accounts of every title we have used here. Account title. Every account title should have T account or a ledger account uh, in most practices. So cash is the first account, and we write all the amounts uh, of cash wherever during these all transactions cash has been written, whether on debit side or credit side, we should write it as is. So the first transaction wrote 100,000 in cash on debit. If you see the next transaction, cash was written as 4,500, right? So for better referencing, you can say this is transaction A, this is transaction B. So if your balances are out of order, you can easily cross match. If you look at the third transaction, there is no cash involved. Fourth, no cash involved. But in fifth, we have cash, and it is on debit side, right? So it on debit side was 500 cash. So we write 500, and this was the fifth transaction, meaning E transaction. So moving on, you don't have any transaction here of cash, but you do have cash transaction in H, where you pay salaries of 275. So 275 is of H, right? Okay, move on. After H, what happens? In I we receive 100, and in J we pay 1500, right? So I receive 100, pay 15. You can easily sum up your cash account by adding all these. So you have, I'm doing these rough calculations. You're not supposed to do it on practically fair sheet. I'm just calculating this as 6275 is the balance, and this is, all these are 100,600, right? So we need to find out the difference between these two. So difference between these two is 100,600 minus 6275, which is 94,94325. We will be writing the difference in balance, since it's a balancing amount. See, when you add all these four numbers, it becomes 10600. So you'll always be writing your balance where it is short as a balancing amount, and you will write it as balance carried forward, right? So this balance carried forward is basically telling you that this is the balance in future. In the next uh, element, it will be reflected. How it will be reflected, we look into it when we move on to the next element. Okay, moving on to the next account title, which was common stock. So common stock has come up as just one time. So we will write as common stock, comma T right under it. It will be debit, it will be credit. This was credited as 100,000. its balancing amount should come here. So VCF will be the balance that will be carried forward. There is a convention to close these accounts by double underlining the amount. So this tells this balance is the actual balance that needs to go forward. Okay, the next transaction is of prepaid rent. So we will be forming the T account of this prepaid rent. Prepaid rent's T account is debit and credit. It is debited as 4,500. Okay, I forgot to mention this amount of 100,000 that it has come from transaction number A. Prepaid rent is basically transaction number B. Since we have done nothing with this transaction, prepaid rent afterwards, so it will be closed as credit balance. So this will be balance carried forward as 14,500 on credit side. So the next transaction account is of cash, which we have already created. The next is basically of account receivable. So account receivable will be the title, and we create account debit. So account receivable was created as 1000 debit entry, and this transaction was C, I believe. Yeah, C. We received this account receivable, half of it in transaction E as well. So we need to credit that amount. So 500 in transaction E we received. So now we have a credit balance of 500 remaining of the account receivables. So the next transaction was of service revenue, which arose, I believe, only once. So we will write service revenue as a title, and we create the account of it, which is debit on left and credit of right. So okay, service revenue of 1000 was credited. It is the transaction C. Yep, C. Do we have service revenue in any other place? No, we don't. So this would mean service revenues balance would be coming up on left side, double underlined. So this is your balance carried forward. Okay. So you have recorded successfully transaction under transaction C. Transaction D cannot be recorded. When you look at the transaction E, you have already recorded cash and account receivable, so you don't need it. Now you have element of transaction F, which generates office supplies and account payable of 250. So you have office supplies account to be created. So office supplies debit. So office supplies were of how many? How much? 250. So they were of 250. So 250 debit. There is no other transactions, so its balance would be 250. Table and line credit. This will be balance carried forward. Balance carried forward. So we had this from the account payables account. So we have only one account payable, I believe. So we will be writing it as account payable. The amount is of 250. Transaction unfortunately is F. So we have to write the reference F here as well. So 250. No other account payable, so this balance will be closed. So we have office supplies account as well. We have account payable. So moving on to the next transaction, we have electricity bill expense and bills payable. So this is transaction G basically. So we'll create electricity expense and expenses of 110 and transaction is G. So we will write G here and then we'll be creating bills payable account. Bill payable. And then so payable is always on credit side, so this is G. Here, unfortunately, we have not closed for the expense, so we will do it now. Forward. Okay, so we have bills payable, we have bills expense. Now we have salary or wage expense to create, which is of 275. Salary, which the expenses are always debited, so it is 275 debit, and it is the transaction number H. So we write H here. Okay, and then we'll write the balancing amount on the right side. This balance will be carried forward. Okay, so moving on to the we just wrote salary or wage expense. So we need to move on to unearned service revenue. Cash is already recorded. So unearned service revenue of 100 should be recorded. Unearned this should be debit. Since it's a liability, so it should come as credit side. This is transaction number I. The balance credit 100. So unearned revenue has been recorded. Now you have just one transaction remaining, which is of dividend expense, and it is transaction J. Dividend expense, which is debit expense, so it should be on the debit side. Balance sheet. was transaction G. Why we have written these transaction numbers or transaction sequences? You can easily compare these transactions with each other. If you look at this theme, yeah, that's fine. You have recorded debit side of A. I may use the highlighter, it's better. So debit side of A. You should have one credit side of A. That's one. You should be having debit side of B, which is prepaid rent, and credit side of B, which is cash. Then you have account receivable as C transaction. So you look at the C here, and you should have a credit side of it, which was service revenue. You can see C here. Then you don't have any D. So you have E transaction, debit side of which is cash, and credit side is account receivable. Where is it? Here it is. Transaction E justified. So you can easily cross check your transactions according to this when you have written the reference numbers. Okay, moving on to the next transaction, you have F, which is of office supplies, debit 250 and credit account payable. So you have cancelling these. Electricity bill expense and bill payable. So you have G and G. So debit and credit. You have salaries or wage expense, which is H transaction, countered with H transaction cash. So you have H transaction 275 here. Then you have cash 100 and unearned service revenue. So you have unearned service revenue as I here, and you have unearned service revenue I here. Then you have last transaction of dividend payment, which is cash credit 1500 and then 1500 debit. So you have not written any excess amounts. So this is how you cross verify it uh, so that you don't make mistakes moving on further. So I hope uh, this is sufficient uh, for today's session. I'm attaching this exercise alongside this lecture, and you are required to do PA12 problem, PA12, right, on these problem sets which I'm attaching for tonight's class. For tonight's class. So, and we'll be discussing uh, this question and PA12, which you have practiced by tonight's class, and we'll see what problems do we face and how do we resolve these. So you are required to do two things from PA12. One, you should be recording journal entries. Two, you should be performing HT accounts, right? We'll be looking into these issues in tonight's lecture. Till that time, see you. Allah Hafiz.